Hello again, fellow BeachBum traders. Welcome to part one of our weekly trading game plan for the week of July 11th through July 15th, called Trading in the Eye of the Storm. And the concept behind that is that we're now between FOMC Fed meetings. We have CPI data coming up this week, and so we're kind of in the eye of the storm. And headed for the economic hurricane that I think it was Jamie Dimon said. So let's talk about some strategies and to see how we can make money trading in the eye of the storm until we get further CPI data, further rate decisions by the Fed, the FOMC. So let's get started. And thank you all for joining us in the live stream of part one of this weekly trading game plan. Again, for the week of July 11th through July 15th. So we'll start out and we'll look at, how the markets ended up last week. It was kind of choppy. It was more active than I expected given the July 4th holiday. There's more activity, very busy, but you never know what the market's going to give you, and that's why we believe it's always good to be prepared. So we'll start looking at the homepage of FinViz. Good morning, Tanvir. Thank you for joining us. Stormy in DC, huh? So here's the homepage of FinViz. You can find our affiliate link for FinViz in the description box below. We can see the markets were pretty choppy on Friday. Started down, and then we got the jobs data. The jobs data was kind of better than expected, and we'll look at that in a few minutes. And that kind of the markets feared that the Fed would be potentially empowered to be more aggressive. Then they kind of recovered, saying, well, maybe the economy's a little bit better, and ended pretty flat. So again, it was a pretty choppy day on Friday. Also, energy was interesting, a whipsaw. We see some of the news. The big news right now, as of yesterday, was Musk trying to terminate his deal with Twitter. So, if you're into Twitter or Tesla, that may have an impact on you. See, again, we're going to see in the futures how choppy energy was. So oil took a dip at one point below 100, bounced back up to over, I think, about 106, and then settled in about 104. Again, nat gas, we'll see in the futures, took a plummet at one point. It was down in the fives, looked like it might even break 5, and then it bounced back again. Certainly gold and silver, we'll see all the commodities were heavily affected by the strength of the dollar and some other choppy behavior. So again, a very volatile week, surprisingly. And then also we saw the treasuries would dip down below 3, and then they bounced back, and now we also see they're inverted. So again, very volatile, a lot of swings in the week this week. So pretty interesting. We still see a lot of weakness overall. There's still the majority of stocks are below their 50-week SMA, below their 200-week SMA. So when we get to the futures, we'll see, are we still in a bear market? Are we coming out of a bear market, etc. Tanbier's asking about DWAC. I have no interest in DWAC. Yeah, I can see why it would run up on the Twitter news. Other social media platforms like Twitter might think maybe Twitter's not going to make it, etc. But I could try to look at the chart for DWAC at some point, maybe for tomorrow. But again, I have no interest in that. So let's look at the indices real quick. Look at the SPY in detail. Yeah, we'll see if we think we're still in a bear market. Are we coming out of the bear market? We can see from the short-term chart on FinViz that we're still in a downtrending channel. It looks like it's trying to test the upper bound of the downtrending channel. If we zoom out, Again, it's hard to determine right now. We did not break a higher high, so we did make a little bit of a higher low here on the weekly, but we didn't break the higher high. So again, one can't say we've necessarily bottomed and we're out of the bear market. There's still a long-term downward trend as we saw in that channel. So again, I would have to assume that we're still in a bear market until we can make successive higher lows and higher highs. And again, we haven't made a higher high yet. So, and it looks like it rolled over when it tested that high. So again, be prepared that we are apparently still in a bear market, still in a descending market. Look at the cues. I expect they all look very similar. Tested a high, failed, and it has failed to make another higher high, although it is kind of testing the lows. So maybe we're getting a stable bottom. We'll see. Again, we want to see higher lows, higher highs to say that we're actually uptrending. The Dow, very similar. You can see it tested, wicked up, and failed, and then trended back down. So they're all looking very similar and very choppy. The Russell, the IWM, very similar. There, you can see how similar all these charts look. So all the markets are pretty much trending the same. Look at the VIX. And the VIX is still reverting. So it's still trending down, still reverting. I know Spacula in our Discord was asking, is the VIX going to bounce off 25 or is it going to continue down to 20? Well, that's a really good question, Spacula. Um, unless we'll see, we're getting the CPI data. I believe it's on Wednesday. If that comes out unexpectedly hot, that may trigger a pop in volatility. But otherwise, it's going to the nature of the VIX is it's going to continue to revert to its mean, so it's going to continue downward. Now we see there's this bottom, at 25, 24.70 or so. So it might find support there. If it breaks down through support there, it's going to go down to 20. So now we'll look at the groups. The sectors, we can see on Friday, the top performing sectors were healthcare, technology, energy, basic materials took a hit. Again, the dollar, we're going to see the dollar strength for any dollar denominated commodities, basic materials, oil, etc. When the dollar pumps up is strong, then that hits the basic materials. We see for the week, again, some of the poor performing sectors previously were the top performers for this week. And one of my theses behind that is, we rolled over into quarter three. June 30th was the end of quarter two. So the fund managers had to report and were probably bailing out of anything that was non-profitable and do what they call window dressing, making their reports look good, getting into the popular stocks, the high performing stocks where they're reporting. Then we rolled over into July, so they look at the worst performers from the first half, and they tend to assume that the underperformers from the first half will be the outperformers for the second half. They do the same thing at the end of the year. So that is my thesis why we saw this rotation from the top performers to the underperformers. So again, the top performers from the first half were utilities, basic materials, and energy. So you saw that rotation. We'll probably continue to see that rotation for a little bit until we get clarity on inflation and the recession, and then you may see a reversal. So again, everything for the month was pretty much red. And again, we saw a reversal out of basic materials and energy. So if we quickly look at the industries in more detail, we see Friday, even though we saw energy was not a real top performer, we see some individual energy-related stocks. Industries were top performing. Solar did very well. Oil was back up again. We see some healthcare, some defensives, brewers, etc. And the worst performers were some travel copper. Copper's been volatile. We'll see it in the futures. Similarly for the week, and we're seeing quite a bit of rotation. Gold, silver were down, and then looks like they might have bounced. We'll see that again in the futures. And then the longer term trend. Discount stores for the month. So now let's look at the economic calendar, the results from last week. So again, the markets were closed on Monday for the 4th of July, Independence Day. I hope you all had a very enjoyable, happy 4th of July, long holiday weekend. And then we got to Wednesday. We saw mortgage rates were not as high as previous. So there was actually, when the bond yields came down a bit, mortgage rates came down a bit, and then bounced back up when bond yields bounced. So the PMI data we could see was a little higher. It's showing green, but it was higher than expected. So again, there's still inflationary factors. ISM was a little down. And then this was interesting. The JOLTS job openings data was there were more job openings still than what they had expected. So there's still, I think they said 1.9 open jobs per person looking. So the job market is still very strong. And the Friday jobs data, we're also going to see that. And that may embolden the Fed to tighten, because their mandate is price stability and full employment, and full employment does not seem to currently be an issue. So again, they may be emboldened to hike rates because they're not worried about the unemployment spiking based on the rate hikes. And then we got the FOMC meeting minutes. It was pretty much as expected. The markets didn't really react because it was what they expected. Ongoing rate hikes will be appropriate, and they said a more restrictive policy may be appropriate if inflation persists. And we would kind of expect that inflation is persisting. It's going to persist longer than I think many people have expected or predicted. And therefore we would expect the Fed to react with a more restrictive policy. Now, that doesn't only mean rate hikes, it could mean that they'll accelerate their quantitative tightening as well. And on Thursday, we got this job cuts data that was a little interesting. So it was higher than previous. So there are layoffs. Then we got the jobless claims data. So you could see it was a little bit higher than expected. So continuing claims, there's a little more people still on unemployment than they expected. And the initial claims was a little higher than expected from the Thursday data. This was interesting too, that the natural gas storage was lower than expected, and that caused some volatility, spike in natural gas. And again, we'll see both of those were very volatile. And then crude oil inventories, rather than being negative as expected, was actually positive. So Tanvir's asking about the biotech sector. Again, it was pretty volatile. It did try to make some runs like XBI and IBB. Um, Again, it was one of the worst performing sectors in the first half, and I think a lot of that was the rotation of fund managers into the most beaten down sectors. Again, good day trade opportunities, scalping opportunities, but again, be careful. Most biotechs are they lose a lot of money. They have potential solvency issues, and they may be at high risk for in a recession. So again, we saw crude oil inventories much higher than expected, and we saw a plummet in oil. But gasoline inventories were down more. So then also on Thursday we had Bullard come out. He tends to be one of the most hawkish FOMC meeting or FOMC members, but he pretty much says he didn't say anything that people didn't expect. He's still supporting a 75 basis point raise in July. He said 50 in August. Now I'm a little surprised he didn't go even more hawkish, but he didn't. So the markets didn't react negatively to that. Then on Friday, we got the actual jobs data, and we can see generally it was kind of better than expected. Manufacturing payrolls better than expected, non-farm better. So the job market's strong. So again, the market, react to, decline, labor market against recession, job. Yeah. So strong labor market. Yeah, jobs fuel rate hike. So we saw the bond market really spiked on this jobs data, assuming that, okay, the Fed's going to be emboldened to hike rates as fast as they plan and potentially faster. So again, volatility. And again, one of my points being, the Fed's mandate is full employment and price stability. It is not GDP. Granted, GDP is related to job employment, but a recession is not part of their mandate. If the GDP declines, again, they can say, well, we're still doing our job. We have price stability and we have full employment, even if they raise the rates and drive GDP into a recession. So please be aware of that. That's not part of their mandate. They're going to be focused on inflation because the jobs market seems to be sturdy. So again, we're kind of trading in the eye of the storm right now. And next week, I'll go over to investing.com in a second to look at the detail of the economic calendar. But the key data everybody's going to be looking at is the CPI data on Wednesday. If that comes out higher than expected or, vastly different than what people expect, that may trigger, a decline in the market, at least some volatility, if not a decline. So again, just a reminder, I'll jump over to investing.com. And typically as this data comes out, I post it in our Discord server. I'll bring our Discord server up so you can see where we post that data as it comes out. And there are links to investing.com, etc., and our Discord server, also on our homepage, beachbumtrading.com, bum without the U, and I'll show you the tools and links on that in a minute as well. So if we go to next week and we see what kind of economic data we've got coming up, we've got one Fed member speaking on Monday. It probably won't cause any issues. Not much on Tuesday. OPEC, maybe, if they say something interesting. Again, the key is CPI data. So if that comes out much different from expected, that may cause volatility, may cause a jump or a decline in the market. So we get some oil inventories. So Wednesday might be volatile for energy again. Okay, we got CPI data. Thursday also we have PPI data, which is producer inflationary data, which is important to say, is inflation on the leading edge of the supply chain declining? If not, then that high inflation is going to persist even longer. So Thursday, that PPI data is more important. Fewer people focus on that, but it is important. Then we'll also get some jobless claims. I expect that will just confirm that the job market is still reasonably strong. So then Friday we get some retail sales. So how's the retail industry doing? We get consumer sentiment. And the last consumer sentiment reading was the worst in history. So we'll see if there's any bounce back in the consumer sentiment. If it continues down, again, these are all indicators that we're headed to a recession. So you can also see the earnings calendar here on investing.com. You just click the earnings. Again, we're in a little bit of a lull in earnings. We have some starting up. They will be kicking off. So Eaton. So you keep an eye on the earnings calendar for the week here, and I'll show you in Webull in a second how you can see the upcoming earnings for the day. So again, we're kind of in a little lull. Once we hit earnings again, that will be interesting. And probably, again, this part of the eye of the storm. We're between earnings reporting seasons, and once that starts up, we'll see more volatility, and it could get ugly. So again, you can find these links to investing.com and all the tools that we use on our homepage, beachbumtrading.com. You can see here's the trading tools that we use. You can see the link to investing.com, FinBiz, ETF database, etc. And then all of our trading platforms we use, all our social media accounts. It's just one place you can go to access all the various tools and sites that we use under the links on our homepage. So we hope that helps. Good morning, Douglas PC. Thank you for joining us. Glad to see you again. So again, we have a couple days of reprieve before there's any major economic data that we expect coming out. We've got a reprieve in terms of earnings. Again, we're kind of in the eye of the storm. When the backside of the storm comes, and please, be prepared. So, and the CPI data may be the beginning of that. And again, just to remind you where we report a lot of the economic data as it comes out, any other news. We have a Surf the Markets channel in our Discord, and you can find the invite to our Discord in the description box below, and also links on our homepage. And again, as this economic data comes out, I try to post it out here in that channel as quickly as possible. So, and you can see the snapshot from investing.com and also the text version. So let's look at the markets in Webull quick. So here's the markets tab in Webull. Again, I like to use this as another view of the markets. And I have a video on how to use this markets tab in Webull. Just a very quick reminder too, if you're not already using Webull, they still have their 6 free stock deal going on from their 4th birthday. So again, if you're not already using Webull, it's our favorite trading platform, and right now you can get 6 free stocks, best deal I've seen. 2 are valued up to $300 each, and once you fund your account with any amount, even $1, you get 4 more free stocks valued up to $3,000. So again, if you're not already using Webull, you can get an account, at least get your 6 free stocks. If you don't like the platform, you can cash them out and take your money and go somewhere else. So again, this is the browser version of Webull, Markets tab. We could see on Friday there were a large number of decliners with a small percentage, and then a large number with a small increase. So you can see the volatility was bouncing back between these small increases and decreases. The tails are pretty thin. We can see the net inflow from the NASDAQ was a little bit higher than NYSE, so that accounts for some of the strength in technology, etc. As I mentioned, you can also see the earnings calendar here on this markets tab in Webull. You can see who's going to report soon. It also shows before market open, after market close. So it's a quick view of who's reporting earnings. And then if we look at the best performing industries, I want to look at it for the week. So we see renewable energy was very positive, uranium, and part 2, we made a number of moves in uranium. We bought DNN, we bought UUUU, we also bought UROY. and I'll show you in the futures probably why. And I could talk about why I jumped into uranium at this time, and those are all nicely positive. I think that's a good trade right now. Renewables was positive. Here's the biotech, as Tanvir mentioned. It was positive. Travel, and again, we'll talk about part of the thesis behind the bounce back in travel. Transportation, very similarly. A lot of these things have to do with the dollar strength, the relative dollar strength. And then auto parts, and again, when I get to the strategy session, I'll mention something I learned that was interesting relative to auto parts as well. So now if we look at ETFs, okay, so right now they're pointing down on the Dow. Short, potentially short mid-cap on the S&P. Down on the VIX. So again, relative to Specula's question, right now they're betting down on the VIX. And they're betting down on the Russell. And they're betting down on China. So we'll talk about Yang in part 2 as well as a way to short China. You can see one of the other ETFs they're using, they're betting down. Is that STNA or dollar TNA? I'm not sure. Oh, I don't know. I'd have to look at what is TNA. Let me see what TNA is. I might have to defer that to tomorrow, but we'll see. Small cap bull. I don't know offhand, but I will look into that. I'll see if I have something on our spreadsheet for small caps bull bear. And just another quick tip. A great way to find these ETFs. In fact, if I don't have one in the spreadsheet, what I would do is go to the ETF database and search for, small cap, and then try to find, okay, the bull and bear for small caps. And you could search for leverage, you could search for inverse, etc. So that's what I use typically to find ETFs, and then I check them in FinViz to make sure I can get the data from them in FinViz. So, yeah, Labu is the leveraged ETF on biotech, and as Tanvir was mentioned, biotech had a pop this week. Again, it's going to be volatile, so be careful. It's getting a pop because it was an underperformer, but I don't think it will hold. And there were some acquisitions, and that's something that doesn't surprise me either. I expect acquisitions in the biotech. Big Pharma is going to buy biotechs. So if I get back to my ETFs, we see healthcare that we were just kind of talking about, biotechs, energy. We see communications, utilities, industrials are kind of negative, cyclicals negative. Again, the previous top performers, basic materials, got hit due to the dollar strength. Consumer defensives got hit, real estate, financial services. That's just not performed well with the volatility in the bond market, etc. And to try to answer your question, Speculant, when we looked at the indices, the SPY, etc., it's indeterminate. It failed to make a higher high. It did make a little bit of a higher low, but when it tested the high, it failed. So it's indeterminate whether we're in a temporary bottom. Now the SPY is still showing in a declining channel. So, and it was testing the upper trend line of that channel. So we have to assume we're still in a bear market till we get some confirmation of lower or higher highs and higher lows, or a breakout of that channel to say, okay, we're now in an uptrend. So we have to assume we're still in a bear market, still in a downtrend until we see confirmation to the contrary. The other thing we have not yet seen is a true capitulation, where we had volatility spike, up to 40 or high 30s, and we see the long tail, of selling pressure. So we haven't seen the indication that we hit bottom yet. So there's nothing to tell us we've hit bottom. Therefore, we should expect that we haven't. So thank you, Spacula. I greatly appreciate that. So thank you to Spacula for the super chat. And again, that really helps. Greatly appreciated. Okay, seeing if I missed anything else in the. Yeah, feels like a bull trap. Yeah, Douglas PC says, yeah, we see these, bull rallies in the bear market, and we get a nice spike up. And we've been talking about this for a long time. Sell the rips in the bear market. Take your profits. Now you can ride that momentum. Great day trade, great scalping opportunities. Same thing in the biotech market. When you get those spikes, you can take advantage of it. Just protect your profits. Because the long-term trend, if we're going into a recession with high interest rates, etc., that's not likely to hold. So commodities, I'll jump back to commodities, wheat, and we'll look at the futures, palladium, platinum, all these commodities we're getting very interesting. They declined quite a bit. I was spending a lot of time looking for opportunities in these commodities. And again, we found some in energy. Some of the other commodities I'm still watching, but they just didn't provide the risk reward that I wanted. What's the schedule on speakers and reports? We talked about the economic calendar for next week, and the main thing is CPI data on Wednesday and PPI data on Thursday. Then we get jobs data on I think Thursday we get some, and then we get Michigan consumer sentiment on Friday. So again, I would recommend going to the calendar on investing.com for any given day or the week. You can see this week, next week, etc. There's a little bit of earnings, but again, we're kind of in between earnings calendars, and that's our earnings reporting season. And again, that's part of why um, I'm saying it's we're trading in the eye of the storm. We're in between FOMC meetings, we in between CPI data, we're in between earnings season. Um, Again, to answer Tanvir's question about pending CPI data, be defensive. Is we don't know if it comes out other than expected. The markets could react very negatively. So again, be defensive. That was one of our other game plans, right? Is the best offense is a good defense. So okay, and yeah, betting up on the treasuries. We'll see. Treasuries again were very volatile. And I've been looking for opportunities there. Same thing with some of the commodities, is I just couldn't find a risk reward type profile that I liked to chase the treasuries. So we'll look at the futures, and then we'll talk about some additional strategies, etc. Again, I've got another detailed video on how to use this futures chart. all the various features, etc. So I won't spend a lot of time on that. We'll just quickly whip through them and see what opportunities we see. And again, to talk about Spacula's question, again, we can kind of see in the futures, all of these indices kind of tested their previous high and pretty much failed. They failed to break out, failed to break through their previous high. So we have to assume that we're still in a declining market. The long-term trend is still down. It did try to test that high until it breaks out and makes a new higher high. We pretty much have to assume we're in a downtrending market. So again, we would play that accordingly. We can see it in all the charts. Um, One of the ones that I was looking at, you'll see in part two, is the European stock market really took a dump, and that's part of the strength of the dollar. So I was starting to look at some of the opportunities, extreme opportunities in these foreign markets. I missed that bounce, but I am starting to look at some of those because both of those foreign markets, you see, they really took a sharp decline. I thought that was an exaggerated move and presented an opportunity, and sure enough, they bounced. We see the VIX is in decline, and we see this oil volatility, and this was the trigger. You'll see it in the oil and natural gas. We see, I think it was like Wednesday or Thursday. I think it was Wednesday. We got these severe drops. Again, oil dropped down below I think it broke down a little below 100, almost to 95. Natural gas broke down to almost, in the fives. It didn't quite get to five. And uranium, and again, I'll talk about this more tomorrow, um, is uranium got dragged down with all this downward pressure in the energy stocks. And I think people were trading the XLE both ways. Is I saw the uranium stocks moving with oil and natural gas, which is a generalization. I didn't, they're not directly related. So I figured people were trading the XLE up and down, and that's why all the energy stocks were moving together. So again, I thought, okay, when oil dropped like this, I expected a bounce. Oil and natural gas plummeted like that. I expected a bounce, and I expected that, along with some positive news that came out about uranium, to trigger an uptrend in uranium. And sure enough, we got that on Friday, I guess it was. We see gold, all the commodities got hit with a strong dollar, and then some of them started bouncing back already. I was looking for opportunities for this bounce in platinum and palladium. And again, I'm looking for a 2-to-1 risk to reward profile. Um, um, so I just couldn't find a good opportunity there that presented that kind of 2-to-1. Now, if you wanted to ride this momentum, you see it was a great opportunity. So whenever you see a plummet like that, that's opportunity. And Spacula is asking, am I still bullish on the uranium stock short term? Yes, but I'm also protecting my profits. So again, it's going to tend to move with the other energy stocks. So we see this bounce back in oil. It's still got a little ways to go. Um, so I think it's going to continue to trend with the other energy stocks. So if they're going up, I think it's going to drag uranium up. Now I would like to see it diverge and get uranium to diverge from oil and natural gas, because again, uranium, this was the positive catalyst that came out as somebody, I think they were an EU member, was talking about uranium as a clean energy source. And I'm hoping that due to their issues with Russian oil and natural gas, that they may rethink their policies on uranium. I don't expect the U.S. to do anything, although the U.S. and Canada have large supplies of uranium. So um, it is to our benefit, but I don't see us opening new nuclear power plants in the U.S., and they take years, and you have to plan, and we have failed to do so for decades. So again, I don't expect anything out of the U.S. I think Europe is more likely. So I hope that answers your question. Is yes, I am still bullish on them. they haven't, they ran up very nicely on Friday, but I'm, manually moving my stops up, and I will show you that in the video for tomorrow. Um, how I'm protecting my profits in the uranium stocks by manually moving my stops up, letting them run, but protecting my profits. So if we get a plummet in energy and it drags uranium down, I'll cash out and we'll play it again. Um, yeah, yeah. I, I I think I mentioned this before, and I'm not going to spend any time on it. But originally, I was going to go into nuclear physics. That was my plan from fourth grade to about mid college was to be a nuclear physicist, and then that became politically incorrect. So I've been looking at fusion for 30 years or so, probably more. And as you can see, it has not come to fruition, and I don't see it coming to fruition probably in my lifetime, unfortunately. So, and then we see all this volatility in the bonds. You see they shot up, and then now they're trailing off. And again, this had a lot to do with this was kind of a crazy move up. Um, it doesn't make a whole lot of sense. But it is what it is. And then here's the real key: is the U.S. dollar just ran away? Is all this inflationary, recession fears, etc., and the bond prices shooting up caused the U.S. dollar to shoot up, and you see how low it got. It almost got to parity with the euro. And I can remember when the euro was $1.5. So we can see how severe. So, and I'll jump over to the strategy because this is one of the themes behind our strategies is this has a lot of effect. The U.S. dollar affects all dollar denominated commodities, so that puts downward pressure on them. The strong dollar. Um, so here's my strategies on dollar strength. So some other things to think about is, travel to Europe is now. I was mentioning this in some of the other chats, etc. Is if you want to travel to Europe, now's the time to do it because you get 50% more euros for your dollar than you used to, and that's going to happen. As people are going to look at travel to Europe because it is now cheap. So if you know of any companies that would benefit from European travel. Possibly, I think it's United Airlines has a lot of foreign travel. I don't know how much to Europe specifically. I'd have to dig into that. But if you can think of companies that are going to benefit from travel to Europe, that may be a good theme to pursue. Similarly, any European companies that do significant business in dollars, if they're making dollars and they're exchanging them back to euros, they're getting a lot more for their dollars than they used to. So yeah, cheap to visit Ukraine. Thanks. Yeah. No, thank you. Or Russia, for that matter. I'm sure the exchange rate to the ruble, so approaching infinity, huh? So that's something to think about again, is that those extreme ratios with the dollar strength opens up some opportunities. Now it's hurting our companies who report their business in dollars and they're earning euros. So conversely, if some company that you're holding or looking at is doing a lot of their sales in foreign countries in euros, well, they're going to lose a lot of money on their exchange rate coming back. So, again, that's something to think about. If you have ideas of specific companies in these areas, please share them in our Discord, in the comments, etc. And I'm going to continue to look at these themes and try to come up with some ideas in those regards. Boy, you're getting me really off track, Tanvir. That's another thing I was into is quantum mechanics and relativity, big time. I'm a huge Einstein fan, and I actually did an independent study in quantum mechanics. So, but I'm not going to get way off track in those regards. Um, Maybe I'll do a title of one of our game plans, Schrodinger's cat. So we can come up with some adages along those lines. So this one doesn't get too long. Let me rifle through some of the other strategies. Um, so another thing I heard, and I think this is pertinent, is smart consumers are already shopping and buying for back to school and holidays. So uh, which is a smart move because you're assuming inflation is high. You're also assuming that these supply chain issues are going to persist. So if you don't order your holiday stuff now, you might not get it. And also, it may cost you, X% more. So smart people are already shopping for back to school. Um, so that tells you something about some of the retailers is who are selling those products, is they may actually do better than expected, and Amazon, etc., might do better than expected. We also have Prime Day coming up. I think it's next week. Could be wrong. Sonia handles all of that, so. But I know it's coming up, and so we're holding off looking to buy some things until Prime Day. So also, we keep hearing that a lot of the former growth companies like Meta, Facebook, Twitter, they're either reducing their hiring plan. Meta reduced their hiring plan. They're going to hire fewer engineers going forward. They're canceling open jobs. They're laying off. A lot of the crypto companies are laying off due to the crypto winter. Um, so be careful with these former growth companies is we can't assume that their past growth is going to continue because they're reducing their workforce or growing their workforce more slowly because they expect their growth to be reduced. So if a company's being priced based on its growth and the growth is being reduced, then one would expect their price to go down, right? So again, be careful with these former high-flying growth companies that are now reducing headcount, preparing for lower growth. So here was the other topic. I talked to the question to think about, and we can discuss it further in the Discord, etc. That say, given that we have high inflation, then given we're headed into a recession, most likely, millennials is either the largest or the second largest population group in our economy. So if we want to know where's the money going to go, a good question to ask is where the millennials going to spend their money. And I had an opportunity to talk to Sonia's millennial niece Tiana and her husband Jared and ask them those questions. Say, okay, given this, where are you going to spend your money? And some suggestions they came up with, which I thought were very enlightening and good, is auto parts. And we saw there was some trend in that industry recently because they have to keep their existing car running because new cars cost too much, and they can't get one because of semiconductor issues, etc. So they suggested, okay, the auto parts, also home improvement. Again, if we saw the runaway prices in new homes or in homes in general, and so if it's too expensive to move to a new home, you're going to fix and spend your money on the existing one. And that was enlightening to me as well because we saw Home Depot and Lowe's and et cetera diminish recently because everyone assumed that people spent all their home improvement money during the pandemic. So that was an interesting theme. And then travel and experiences. The millennials are big into experiences, and they're willing to spend their money in those areas versus other buying stuff. They don't buy stuff; they buy experiences and travel. Um, And uh, yeah, so they also prepare for travel. They use Airbnb. Um, they don't use Verbo as much, except if they go to the beach. So if they're gonna go to the beach or go somewhere with a group of friends, they might get a house through Verbo. Otherwise, their first stop is Airbnb versus, chain hotels, etc. Now I looked at Airbnb to try to see if I could trade that theme. It looks attractive. It's been declining. It's their PE ratio, I think, is too high. I think that's what the issue is, and I think that's why it's declining. It's not that they're profitable; they make good money, but I think they just got ahead of themselves, and their PE ratio is too high. And I'm guessing that's why it's going down. But it's definitely something to keep an eye on. Once that PE ratio gets compressed to be reasonable, I think Airbnb is an attractive company. Maybe I should do further due diligence on Airbnb and investigate that further. That's probably a good idea. So also, many to most millennials have cut the cord. They don't even have local stations. They don't have cable. They pretty much just use streaming services, whether it be through Roku or what is it, Hulu and several others. Um, and internet based content. So a lot of them now are watching shows on YouTube. Um, and I also, asked and found out that of the various digital social media services they do use YouTube, they use Instagram, they use Pinterest, um, but they don't use TikTok. So again, that was enlightening. I wanted to know, do millennials use TikTok? And at least the ones we asked, they don't. They use YouTube, Instagram, and Pinterest. So this tells you in terms of companies wanting to target millennials. And again, you want to know where's the money going? Where's the biggest target market? Well, the millennials are one of the biggest target markets next to the baby boomers. So if a company wants to spend their marketing dollars, and they want to target millennials, and they have to uh, be be studious with their marketing dollars. They're probably going to spend them on YouTube, Instagram, Pinterest, but not on TikTok, right? So again, I thought this was all good information, something we can think about further, discuss further, find specific companies. Airbnb during recession, yeah, it was actually Airbnb evolved out of the 208, 209 recession. Again, because it's a cheaper alternative. Um, so yeah, we'll see. Again, they need to get their PE ratio in line, and they also need to contain their costs, etc. So we'll keep an eye on that. Been through a million. So I'm trying to keep up with the. Yes, YouTube is the new TV. I agree. I watch a lot. There's shows that I could watch on Bloomberg on TV, but I can also get them on YouTube now as well. So, and many of the Bloomberg shows, etc. And there's probably a lot more. So yeah, YouTube is the new TV. I spend more time now on YouTube than I do watching TV by far between trading videos, etc. Yeah, and I think that's a big trend. So I think Google uh, is is a good company. YouTube's making a lot of money, so which is great. And hey, we're contributing, right? We're producing content, we're spending our time here, so that's all very helpful. So I'm going to try to wrap up. If anybody has any last minute questions, please throw them in the chat, throw them in the comments, join us in the Discord. We'll try to answer as many as we can, and think about what else are millennials going to spend their money on, which will benefit from that trend, or what are they not going to spend their money on. Question I didn't ask is, do millennials go to movies? I don't know. Um, that obviously would affect an AMC, etc. Do they go to concerts? Again, I don't know. That's Ticketmaster, etc. I know we go to concerts, but do millennials? I know baby boomers don't probably go to a lot of concerts. So that's interesting. Yeah, and the defense industry is, yeah, I think that's pretty recession proof, and I think you're going to see a ramp up in defense in general just because of the Russia-Ukraine thing. Um, oh, you still spend your money on iced cappuccinos, huh? Okay. So is that Starbucks or do you go to Dutch Bros? So actually, there's issues with Starbucks, so I won't go into that in detail. So okay, let me try to get wrapped up. In general, I'll jump over to this poll just so I can show it. But just FYI, and tomorrow I have to go pick Sonia up at the airport. I'm not going to be able to do a live stream or a premiere for a live chat. So I'm going to have to pre-record part two, which I will do, and I will schedule that for release at 10 a.m. tomorrow. Um, but again, that's an exception. Right now, it seems like from our poll, I believe 10 a.m. is still the preferred time. If you haven't already voted on the poll as to what the preferred time is for these live streams, right now 10 a.m. is the preferred time. 10 a.m. works real well, gives me time where I'm not rushed as well. So, as long as that continues to work for everybody, but please vote on the poll. Let us know what you think of this weekly trading game plan part one. Again, I will record part two with the updates to our watch list based on all of this information, and that will be scheduled to come out at 10 a.m. tomorrow. So again, let us know what you think of all this. If you have any questions, comments, recommendations for improvement, please put them in the comments below. You can put them in our Discord, contact us via social media. And again, all of our links to our social media sites are in the description box below, and also is links on our homepage, beachbumtrading.com, bum without the U. So again, please let us know what you think, and come back tomorrow for part two at 10 a.m. tomorrow. Again, that'll be scheduled to come out tomorrow at 10 a.m. And we'll update our watch list for the week of July 11th through the 15th. So y'all have a great rest of your Saturday, and I'll see you later. Good luck and have a great trading week. Bye.